Hello, my name is Steve Bigelow with the Candlestick Forum. With the market continuing its bearish J-hook pattern, there's some very powerful power patterns working. So when we see the market doing what we expect, there's our bearish J-hook pattern where the indexes came up right before the what was it, the CPI, or I guess it was a CPI report. So we had wave one, wave two, wave three. Obviously, wave three started with a strong kicker signal to the downside. The only thing we have to watch out for now is we're in the oversold area and we're starting to move a good distance away from the T line. Doesn't necessarily mean the downtrend is ended. It's just saying be a little bit more cautious at these levels. You might be see some consolidation or at least a bounce until the T line catches up. Same scenario here on the NASDAQ. Bearish J-hook pattern, starting with a bearish kicker signal, one of your strongest candlestick signals. And they gapped it down on Friday. Came up a little bit going into the close, but not anything telling us that there's any major change yet of investor sentiment. So you're in the oversold area. You're starting to move a little bit away from the T line, and you gap down. That tells you to start watching for a possible reversal, especially now that you've hit this area right here. With that, we can take advantage of the power patterns. A power pattern is something that you can see setting up. And when it breaks down, these are the type of results that you want to expect, because this basically illustrates how investor sentiment is slowly turning over, getting more bearish, everybody's starting to bail out. So those patterns are being still easily identified. PayPal, for example, you can see it's rolling over. You had sell signals up here, closes below the T line, a failure to hold the 50, and on Friday it did a doji, which gives you a very high probability entry that if it opens lower on Monday, look for a bearish doji sandwich, which would also be confirming this pattern setup, meaning more downside. There's still a gap down in this area. Same thing on PGNY, one of our recommendations. If it opens lower, this slow curve type bearish setup would tell us there's still a lot more downside possibly coming down here to fill this gap. So anytime we can see this curvature, notice on PTLO, we recommended going short on this one based upon if it opens lower, it's confirming this level not holding, and you can see the slow curve top, which obviously was failing right here at the 200-day moving average. So if you're shorting this on weakness, you're basically putting all the probabilities in your favor that you've got a pattern that's showing investor sentiment building up to the downside. You've got a breakdown level, and your stochastics tell you you're probably still heading lower. ARLP, there was your rollover, there was your gap down, there was another gap down when they showed they were going to fail at the 50, giving you a lot of downside pressure, telling you they're trying to get out of this one with great enthusiasm, exactly where you want to be if you're shorting stock. So as long as this market isn't showing any buy signals, again, you want to be a little bit more cautious down here because of the distance away from the T line. But as of yet, there isn't anything showing that the bulls are starting to step in. That'll be it. We'll see you in the chat rooms.